All right, so everybody wants to know, can you be a profitable trader while also having a full-time job?
I guess we'll never know.
No. Seriously, let's get into the video. I'm going to show you how. Hi guys, welcome back to my channel. If you guys are new here, my name is Mel, and if you're not new but you just keep cycling back but you haven't subscribed yet, please stop wasting time and subscribe. Please share this video and like it. Share it with individuals who are like-minded and interested in growing their wealth and learning about investing and trading. The topic of can you trade stocks while also having a full-time job has been asked and asked and asked, and I'm here to tell you that absolutely yes, you can trade while also having a full-time job. Okay, I'm gonna give you some tips, some pointers, some of the strategies that I've even implemented to make money while also working. It is very doable. So stick around, I'm gonna show you how. All right, so I know you've seen it. You've been watching your favorite YouTuber trade, or you've been watching the news and a trader comes on and they have multiple monitors in the background, and you're probably thinking like, oh my God, I would love to be a trader, but I just can't because I can't afford to look at a screen all day. I'm here to tell you, you do not have to do this, okay? I have traded and I have actually made the best trade I've ever made all on my phone. I placed it on my phone. I got out of it on my phone, okay? So you do not have to necessarily have 1,000 monitors. So if you're new to trading, I want to explain something to you. So traders use technical analysis to execute trades, and so what that is, they're looking at historical price movement, and they use a candlestick chart. So this is what a candlestick chart looks like, and I'm not going to go into detail on how to read this today, but this is what traders use. So if you don't know, this is it, okay? And then with these candlestick charts, you have time frames, and the time frames, depending on what time frame you use, is going to kind of dictate what type of trader you are. So you have your lower time frames like your 1 minute and your 5 minute, even 10 and 15 minute, and then you start to go up to your hourly. You have like a 4-hour chart, daily, weekly, even monthly charts. Okay, so I'm going to give you 3 types of traders. So you have a scalper, right? So a scalper is a person who is pretty much in a trade and out of a trade in like a couple of minutes. They're looking at like your 1 minute and your 5 minute time frames, and they may need multiple monitors, okay? Your second trader, so the day trader, you are a person who may get in a trade at the beginning of the trading day, and you're probably out of it before the trading day is over. And you may be looking at like the 15 minute or the hourly. You may also, or they may also need a monitor or two, right, to look at, because their money dictates how the market is moving pretty quickly. So they may need multiple monitors. And if you have a full-time job, those 2 type of trading styles may not be for the person who is required to be at a job and haven't, maybe you haven't fully stepped away from it yet. But then the third type of trader, this is what I typically use. I day trade occasionally. I don't scalp at all. But the third type of trader is the swing trader. So the swing trader is the person who gets into a stock maybe on Monday. You may hold overnight. You may hold to the end of the week or even next week. Another good thing about the swing trading method is if you have an account where you aren't a pattern day trader, or you're not qualified to be a pattern day trader, you can check out my video. This video, I talked about ways to get around the PDT rule. But if you don't have an account that's greater than $25,000, swing trading honestly may be the best route for you anyway, okay? So it's not just for the person who has a full-time job. So I'm going to show you things and ways I use to become a profitable trader as a swing trader. So I think that swing trading is good too, because you can chart the night before the stock market opens, okay? And you may be wondering like, why does that even matter? Okay, so trading is half psychology, if not more. It might be 80% psychology. And by psychology, I mean your emotions, how you're feeling when the market is open, and you may make good trades, you may make bad trades. And a lot of times those bad trades are from your emotions and what you're letting them do to you while the market is open. Okay. So with swing trading though, if you chart the night before the market is open, and we use the daily time frame to swing trade. So I would go in and I'll see where people are buying buying. Maybe the night before, I saw that a lot of buyers came into a company at like the $100 price mark. So if the price pulls back to $100, I have already made it up in my mind the night before that I'm gonna set a buy order at $100 for said stock to execute. Okay, so now going into the next day, my emotions are out of it because the market is not open, the market is not moving, and you can set alerts. That way, when the price is coming back down to your target, you can either, you know, set the alert to let you know. That way you can go ahead and buy it, or you could set what's called a bracket order. Okay, so that's two things that you can do. So let's just say, for example, we have ABC Company, and the night before on Tuesday, ABC Company had a price breakout at $100. Okay, so we had some indecision maybe on Monday where the stock kind of just went to the side after a lot of people sold. So maybe the people were selling the previous Friday, and then Monday the selling may kind of stop, but then on Tuesday we had a big breakout at $100. Okay, so now on Wednesday, so it's Tuesday night, and I've decided this. So on Wednesday, when the price comes back to $100, I can set an alert to notify me when it gets to maybe $101, and I'm ready to unload. So I could set a buy order to buy 50 shares at $100. Okay, and I don't have to do anything else. So I have executed the order, 50 shares for ABC Company at $100, and I don't have to do anything else other than, you know, manage my risk. Okay, so this is how you can manage your risk while also having a full-time job. So like how I set the alert when the price was approaching my entry, you could also set an alert to take you out of the trade if, you know, your price is going against you. So we talked about risk management in the past. If you missed that video, I will link it down in the description box. But let's just say I got in at $100 and I want to get out at $95. So if I bought 50 shares and I have $5 worth of risk, 50 times 5 is $250. So I'm only risking $250 on this trade. So I could set an alert at maybe $96. So if it gets down to $96, if I'm at work, I could, you know, maybe run into the bathroom real quick and I could put in a sale order to just take me out of the trade. Or another thing I could do is I could set what's called a bracket order. So a bracket order is something that was my best friend when I was working, you know, all of the time when I was trading stocks or trading stocks. Now I'm still trading stocks. But what you could do is a bracket order allows you to set the whole trade up, you know, before you even go to work. So back to the same ABC Company example. So you could literally set the buy order at $100, but the night before. You can do this the night before with stocks. I've tried this on my platform with TradeStation with options, and I have not been successful. You can't set an order while the market is closed with options, but you can do it with stocks. Okay, so I could set a buy order for ABC Company at $100. So buy 50 shares at $100, and then I could place a sell order or a stop order at $95, and then I could set a take profit at, let's just say, $115. Okay, so that is called a bracket with an OCO, order cancel order. So what it is I have a buy, I have a sell at the bottom, which is my stop, and then I have a sell at the top, which is my take profit. Okay, so the OCO, which is order cancel order. So what that does is, so once I'm in the trade at $100 on ABC Company, if the price just say goes against me and I'm out of the trade at $95, it's also going to cancel the $115 order. So I'm just completely out of the trade. So this is really good for a person. Maybe you work a really demanding job like a nurse. You don't have time. You're always on the go. This is really good for you because you can set all of this up and just let it do what it do while you're working your 12-hour shift. All right, so just a quick recap. So once again, you can absolutely trade with a full-time job. We mentioned that swing trading, which you're looking at the daily time frame, is probably your best option. You can chart, or you should absolutely chart before the market even opens. So whether it be the night before or maybe the weekend leading up to the trading week, you can set alerts that could let you know where your price is coming to. So if you're trying to enter the company or the stock on at $100, maybe you want to set an alert at 101. That way you can run into the bathroom and place your order. Or you could set what's called a bracket order, which is an order that allows you to set the entire trade up prior to the market even opening. So one thing I do want to mention about the bracket order, if you are placing this, after hours, you want to make sure that you set the order type as a GTC or a good to cancel, because if you don't change it and it's under day, it's not going to let you place the order. So don't come asking me or saying, oh Mel, it didn't let me do it. I'm telling you, you got to change it to GTC, okay, so the order can execute. So what if I told you that working may be better for you anyway when you're trying to be a trader, especially at first, okay? So you may be wondering why I say that. The reason why I say that is because, like I mentioned, psychology, trading psychology is like one of the most important parts of trading. You could know exactly where you're supposed to be getting in, but if you are sitting at your computer all day, you could go against everything that you said the night before, and you could get in too early. You could try to start chasing the stock and end up losing money, and then you're wondering why, but it was all because your emotions weren't in check. But if you're at work, if you're busy, you're keeping your mind wandering and you're not micromanaging your trades, okay? So I personally think that you having a job may actually benefit you, okay, in the long run. I noticed that I took a time off, like an extended period of time. Like I was making like so much money trading stocks and I was working full time, and I was thinking, oh, well, if I can do this at work, let me just go do this 100% full time. And what I noticed was when I stopped working so much and I went home to try to do the same thing, my win rate wasn't as good as it was when I was at work. So keep that in mind. Keep your job. Do not quit your job. Not yet, at least. I know we all want to be completely free of our jobs, but until you get to a certain amount where you're consistently making money and you get your trading psychology in check, keep that job, swing trade these stocks, set the alert, set your bracket orders, and you will be successful in trading. And manage your risk. Risk management, like I always mention, is super important. Well, thank you guys for watching yet another video. Please like, subscribe if you haven't already. I do want to give you a little book, or not a little book, but a book that I think is really good for trading psychology because I have mentioned it. It is Trading in the Zone by Mark Douglas. It is a super good read. And if you don't have time, maybe you're driving from work, you can also listen to the audiobook. It is a great read. I listen to this book probably every 3 to 6 months just to kind of get me back to where I need to be when it comes to trading stocks, okay? Because trading psychology is super important. But yeah, that's all I have for you guys today. Join the Discord if you haven't already. I will put it in the description box below. Thanks.